Hi everyone! In this chapter, we're going to break down some key financial terms that every contractor should know in construction accounting. Whether you're just starting out or have been in this game for a while, understanding these basics can really help you running a healthier, more profitable business. In this chapter, we'll walk through overheads, job costs, gross profit, net profit, and the basic charts of account commonly used by construction company. So, what is the overhead in construction? Basically, it is an indirect job-related expenses. These are things like office rent, mortgage payment, staff wages, computers and equipment, utilities, insurance, payroll taxes, your bookkeeper, your own salary, fuel, and other ongoing business costs. Overhead plays a huge role in pricing your work correctly. The problem is a lot of construction companies don't calculate their overhead often enough. And when you don't track it, even small changes in your costs can quietly eat away at your profits. Job costs. Job costs are the direct expenses tied to specific projects like labor, materials, subcontractors, permits, and things like that. But here's to get a little tricky. Let's say you're renting equipment. If it's for one specific project, it is a job cost. But if you're using it across multiple projects, it becomes overhead. Same thing with the superintendent. If they're working full-time on just one project, their salary counts as a job cost. But if they're bouncing between jobs, that's overhead. One important thing to remember, job costs are tracked per project, not company-wide. That's how you know whether each project is truly profitable. Let's talk about gross profit, one of the most important numbers in your business. Gross profit is what left after paying all your job costs, but before paying any overhead expenses. It tells you how much you make before covering your business expenses like rent, payroll, and insurance. You can calculate the gross profit for each project, but not net profit. That's because net profit includes your company-wide overhead. Gross profit doesn't. So, what does gross profit tell you? It shows how efficient your job execution is. If you're managing your labors, materials, and subs well, you will see it in your gross profit. And here's the thing. Most contractors want to see this number, but they don't track it properly. If you're not tracking gross profit per project, you're just guessing. You won't really know which jobs made money and which one just kept the wheels turning. High gross profit. That's meaning you're running the job right. Low gross profit, something slipped. Maybe labor overage, material wasted, and change order issues. Track it, review it, and learn from it. Because gross profit is your first line of defense when it comes to profitability. Net profit. Net profit is how much money your company actually keeps after covering all job costs and overhead. It's not your salary. It's not what you pay yourself for running business. It's what your business really makes after all costs are covered. Net profit is measured on an annual basis, and it shows whether your company is truly profitable, not just job by job. You can run great project and still end up with a little or no net profit if your overhead's too high or you're underpricing your job. So don't just track job performance. Watch your net profit. That's the number that shows if your business is actually winning. One more important concept, the chart of accounts. This is the backbone of your accounting system. It organizes all your incomes, job costs, overhead, and other financial data so you can understand where your money is going and make smart decisions. Most of the construction businesses use similar categories. Let's break them down. Assets, what you own. This includes cash, tools, equipment, or anything with value. Liabilities, what you owe. Think loans, credit card balances, or unpaid bills. Equity, also called capital. This is the money you or others have invested into your company. Income, or revenue. What's your pay for your work, your project earnings? Cost of a revenue. Direct job-related costs like labors, materials, and subcontractors. Other expenses. Costs that don't directly relate to your core business operation. Setting up a clear chart of accounts keep your books organized and your financial reports clear, so you're always in control. Let's wrap it up and quick recap. Overhead is a cost of running your business, things like rent, admin, and insurance. Job costs must be tracked per project so you know what each job really costs. Gross profit shows how efficiently that you're managing each job. Net profit is where you actually earn after covering all your costs. And your charts of account keep your financial data clean, organized, and easy to understand. Get this right, and you will have a clear picture of your business and your profits. Check out APARBooks, construction accounting software specially designed for contractors. Visit our website to learn more. Thank you.